Order filled. Order filled.
All right, good morning. Good morning, good morning. Hopefully you're having a fantastic day today. Today's CPI, we had CPI on screen. Unfortunately, I was getting some coffee and then doing some last minute honeydew stuff for my wife. Now that we got all that done, we are ready to rock and roll. CPI. CPI tends to happen in two moves. So you tend to have a initial 8:30 move and then a 9:30 reaction. So we don't know which way it wants to go. However, considering this is freaking all-time highs right here again, and that candle, literally all of that was brand new prices that we've never seen before. I'm assuming some type of retracement. That is the expectation that we're looking for. I'm also putting on my chart the previous day high, the low, and the equilibrium. You'll see that right there. On my charts, previous day high, low, and equilibrium. And then I just am about to put on our midnight open. So we need to find where midnight is, and we'll put that on here. There it is. All right, midnight open. And we're going to see where that, it was right on the midnight open, it hovered right around that. We're going to see where that is in regards to the open. My expectation is we'll probably, if we're above midnight open, I'm going to be looking for an entry to go down to midnight open as well as the news candle. So this would be right here. And then in regards to that, let's check out and let's see where did regular trading hours end? And regular trading hours ended yesterday right here. So this is the midnight open, and here is the last point of trading from yesterday. So that tells me that the draw on liquidity, very high probability, is going to be down towards these lows. So it's going to be kind of quiet. If you have questions, drop them in the comment section. Happy to answer any of them as we await the opening. I am going to be doing a little bit of some research, some chart analysis, and I'm going to be using I'm testing out some different things. So not quite ready to share them on stream quite yet, just because they're not proven, and I'm just doing my back testing, studying. So that's what we're going to be doing while we wait for some structure. We need a little bit more structure to take place.
This means we put vertical line on mid.
Morning, Matt. I don't know if you're still on or not, but I did touch on the reaction with CPI. We want to see how the 9:30 candle opens or what happens with that. My initial draw on liquidity is going to be the data lows, the midnight open, and then previous day trading hours, the the opening range gap, which is sitting about right here. That's what I'm going to be looking at. I want to see if this previous day high that's sitting right here is going to act as support for another move higher. It's common, I've seen this happen many times, where we'll have a data high, then we'll come low, we'll break below this, and then we will attack that data high again during regular trading hours, and then we fall off. That doesn't mean that's how it's going to happen this time, but we really need to put some type of narrative that is likely so that we're not getting caught on the wrong side of the trade. So right now, I do know that we're probably going to move towards the midnight open, the data lows, and the regular trading hour open, regular trading hour gap. So right now we're still creating that gap, but as soon as 9:30 opens, let's say assuming it opens up here somewhere, we're going to have this gap right here that it needs to fill, and it's going to run, and the gap closes around here, which also is the previous day high as well. So we want to see some support there. More than likely is what we'll find. A lot of exciting stuff going on here. I am honestly just blown away. Just with where the market's at and where the economy is, with the rumors of war, with election years, the election cycle, it's just insane that we're going higher. And May, June, and July tend to be seasonally, it is they're usually poor months. Usually they're down months. So we're seeing the absolute opposite take place right now. So we're going to wait. We're basically just waiting for open, waiting for some structure to form. And I'm going to do some analysis here. I'm doing some studying on the midnight open. I'll tell you that. That's what I'm doing some studying on, is the midnight open. I've come across a couple different things that have talked about how price, specifically the NASDAQ, will react to the midnight open during different parts of the morning. So that's really what I'm digging into. I want to see, how does price react to that level at different points of the day? Oh, what is it? I forgot about that. Gonna be a little boring, so sorry guys. We just gotta wait for structure to form. That's what we're really waiting for. But stick around, stick around. It'll definitely be worth it. There'll be lessons learned, especially if you want to learn ICT concepts. That's really what we're focused on. We're focused on ICT concepts. Waiting for structure to form, guys. We're waiting to see what Price wants to do. And you can just tell by how slow it is right now that we probably going to have to wait till open, which is going to be about 30 minutes. So I'm taking this time doing some studying, which you should do as well. Do some price reading. Price will probably trade fairly well until 11:30. Then my expectation is going to be trash till about 2:30 because we have FOMC also after this afternoon. as we wait here, if you guys got questions, thoughts, or anything like that, I am watching the chat. I'm watching it, so. Watching the chat, so let me know if you have any questions or anything. We're waiting really for structure and waiting for the Midnight Open, or I'm sorry, and waiting for the New York Open. It's 8 a.m. right now, so we got about 30 minutes till open. I expect some action till about 11, and then it probably won't be very good until after 2:30, which is FOMC. So CPI we just had this morning, good reaction candle. All-time highs sitting right there. Might as well just mark that bad boy out. Sorry, not much excitement happening right now, guys. I know people are in and out, in and out, in and out. Not helpful for my average view duration. It's helpful right when I'm taking some trades right away. Nobody wants to sit around and just wait. Nobody got time for that. I do, because I gotta make some money. Gotta make money trading. Well, it looks like Apex accounts are at 71% discounts. So my coupon code of 80% will actually only be 71. I gotta update that. I gotta update it. I better get that. Some new rule, the Apex did change, no more 90% off, down to 71%. So I'm actually creating that icon for the top left of my screen. So we gotta make sure that's updated. So I'm gonna get that here real quick. Still waiting for some structure. Yeah, if you look at the charts right here, guys, I mean, we have nothing happening. I mean, what do you want to say? What do you want to say? This is a fair value gap long. I'm like, no. Whenever you see consolidation like this is straight up trash. Okay? I mean, I could zoom out. I could get really, really small here. And now we're looking at two handle moves. So, you know, that's two handles right there. Well, we're hanging out where? We're hanging out in this fair value gap. Okay? This really isn't anything we want to mess around with. And the main reason why is, as you can see, we're not really expanding. Either way, we're really consolidating. So if you were to gotten in on this first fair value gap expecting, oh, we're going to the all-time highs, now you're waiting for 1, 2, 3, 4, 5, 10 minutes, and you're just wondering, is price going to go up or going to go down? Going to go up, going to go down, going to go up, going to go down. You don't want to waste your emotional capital on this. So while it's extremely boring to just sit here and look at somebody else's chart, we really should not be trading or executing right now. We're waiting for price to give us structure, for expansion to take place. I don't care which way it goes. You shouldn't care which way it goes. It could go up or down. We're literally just waiting for something different to happen. We need some volatility in price because my favorite type of trade, the breaker, looks absolutely phenomenal when price starts moving. Okay? It looks beautiful. It is beautiful. Let me show you from yesterday. I wasn't on the charts. I was actually outside. I wasn't able to sit in front of the charts. Look at this bad boy right here. I wish I was here for this. Tell me if you can see. Give me a 1. Give me a 1 if you can see the breaker. Give me a 2 if you can't see a breaker. Okay? We're looking at price action in this area from here to here. Okay? Tell me if you can see the breaker inside that price action. A 1 for yes, a 2 for no. Yeah, there's a few people on here, so I'm expecting at least a couple responses here. If you're on the stream, I'm going to teach, but you're also going to interact. So, you guys don't want to interact? No answer. Do you see the breaker? It's a beautiful setup. Beautiful. That would have been super nice to have. Oh, the question. Do you see the breaker? The breaker. Do you see the bullish breaker from yesterday? I wasn't able to trade yesterday. Yesterday morning. I got in some for the afternoon. And while I did pass an eval, but I started jacking around with one of my funded accounts because I had one loss, and I'm like, oh, let's get back to break even. I ended up losing the account because I was just jacking around. We were towards the end of the day, it was around 350 or 350, and you know, you have the volatility around there, and I was just doing some stupid stuff. I shouldn't have done it. But yeah, the breaker is right here. It's a beautiful, beautiful setup. This is my bread and butter. This is what I want to see take place. When you have volatility, so Tiff, we were talking about volatility, and while I'm sitting on the charts doing nothing right now because price literally is doing nothing. When we have volatility and we start seeing structure form and we start seeing this right here is a change in state of delivery, a CISD right here. Once we break above this high, this swing high right here, this becomes a valid breaker. And we're waiting for price to come down into this breaker sitting right here. So as soon as price comes into this dark shaded area, this is a green light to go long. Now, why can we go long? Because we grab these equal lows here. So this is price action that we're looking at. Look at these relatively equal lows right here. Okay? Price, because we purged these lows, we could have purged these lows, but guess what? We didn't. But we did purge some sell side liquidity, and then we set up for a long. And if we see this set up, you have to take the risk on this one, targeting these highs here. And that is my breaker. That's one of my favorite setups, Tiff. What is your favorite setup, if you have one? My executions are on Tradeovate. So they go on Tradeovate, but I put them on. But as you can see, I have the add-on for TradingView because I like charting with TradingView. The unicorn breaker is nice. The unicorn, I kind of get those. Oh, time frame. This is on the 1 minute. I usually will take most breakers on the 1 minute. 1 minute or 30 second. Preferred the 1 minute. I'll do the 2 minute as well. The 5 minute, what I'll do for 5 and 15, when it hits a breaker, let's say a 5 minute breaker, I'll go down to the lower time frame and look for a setup there. Because for my model, I usually only do a 10 to 15 handle stop loss. And I find that I would say a majority of time on if the breaker is going to hold, it will stay within 10 handles a large majority of the time. Ten handles is 40 ticks. 10 handles is 40 ticks. Yeah, I mean, handles, ticks, a handle is 1 point. So whatever ticks divided by 4. A tick is every time it goes up or down. So every 25 cents is a single tick. So I want to, so you can see there, right? That's 26 handles and 2 ticks. So it counts it based on handles, every number. But you can also see on the far right here, that's the number of ticks. So if you do your measuring bar, the measuring bar is always helpful. So it'll give you the handles and the number of ticks. But when you're in a live trade, it only tracks the ticks. So that's why I know both. One handle is 4 ticks. I'll be executing off my screen again today. I'm on my micro account that's trading, or my copied account, which is copied on a few different accounts. I'm thinking of doing another eval challenge. I bought a couple more evals that I'm just holding to do some eval challenge. So I'll probably do an eval challenge sometime next week. A 1-day eval pass or fail challenge. I'm going to give a little more notice. I think that was fun. I enjoyed doing that. I'm actually editing that video, and I'm going to put it into make a shorter video where I'm breaking down each of the trades that I took. So right now, this is the only valid setup I see. Is right here. It is nice when you can just get them done. The one I passed yesterday, I didn't realize that it didn't. So I have to wait like 7 or 8 days for that. 7 days, I think, for that. So I already took just a single micro trade on that account, just to count for the number of days that I have to have active trades on it. So 7 days from now, I'll have another funded. Do you mostly trade your funded accounts, eval accounts, or do you have a cash account you trade? For prop firms, it's at the top of the screen. Apex is what I use. Man, Apex, when I've looked at all the different ones, and with all of the drama and the crap going on with all these funded accounts, Apex by far and large is the most has been the most reliable as far as liquidity reasons. So I'll deal with their trailing drawdown, which really requires you to be more intentional in your trades. But once you have a funded, there's really 3 stages to a funded. You got your eval, you got to get $3,000. Then stage 2 is you got to get another $3,000, and then stage 3 is anything above that $3,000 from stage 2, you basically get a keep. So that is, and then you don't have a trailing drawdown after that point. So if you guys want, they just changed the rules or changed the sale price to 71% off. So I will be changing that at the top of my screen. It says 80 right now. It's 71% off the eval accounts. Now, this is just me, but I think the first trade, I'll either just take on eval or I'll do very small leverage, simply because I want to see what kind of price action takes place. Because FOMC is later today, I don't know how clean it's going to be, and you just don't want to assume it's going to be clean. This is a live trade right here. Good morning. We closed below this fair value gap. We retraced up into it. This is I want to see how price reacts. I want to see how price is gonna form up today. Five minutes till open. All right, so if we're looking at this as a trade, you would have gotten in here, or you could have got in on the retracement here. You would make your stop at break even right here, and you would be taking a partial since it ran this low right here, because we do have this fair value gap. There's a good chance we'll see some type of bounce here. And then we have open in 4 minutes. Really nothing. I mean, the only bit of price action we really can look at is right here. I mean, this is really all that we got because we're at all-time highs. So we got a low, high, lower, low. We grabbed some liquidity. We're in a fair value gap. We also have a high probability bullish order block, and it's high probability because directly above it is a fair value gap. So we got a fair value gap above this order block. We have a low, high, lower, low. Let's see if we want to push higher or if we're going to continue lower. This only works as if we want to continue higher. Low probability simply because this is all-time highs and we just hit that. Typically, I like to see price run for these lows, and so I'm looking for a short side setup. That's why I'm interested in this this fair value gap right here to the short side. We have a high, low, higher high here. Break below this, and we could come back up into this fair value gap, into this breaker for continuation lower, or we could literally just chop around. I'm not doing anything until a couple minutes after open just because I expect some high volatility. And with high volatility comes lots of wiki wicks, and wiki wicks is what really can destroy accounts. They can obliterate accounts. The trade that I had yesterday that I got in, it was an inversion, and it ended up playing out. It didn't break the low, but it wicked so far below it that it just hit my stop. That my stop loss that my stop loss that I had sitting there in case that price just got crazy, and it ended up wicking it, tapped me out to the cent, and then moved in the direction that I wanted. So proper placing of your stop loss is so important. So you got to make sure everything is lined up for you. Everything is lining up. All right, what do we got here? 30 seconds till open, and we're probably going to run. We'll probably close below this, and if we do that, my assumption is we're going to run this low immediately. I'm not going to do anything. If we close below this box, this fair value gap, we inverse this, we should run for this low. But we could just wick up here and then wick back down. That's why we're not going to do anything with it. 3 seconds, and we close below it. All right, we close below it. Let's see what happens here. We're looking for that. Here would be the entry. Your stop is above that, and your target is that low right there. Boom, we just hit it. I did not take that, but that's what I expected price to do. I'm just not going to take that on open. Okay, my target is going to be the midnight open. That's really what I'm looking for. So price has worked out for this inversion and this inversion. We definitely have some bearish price action. We're breaking some discount arrays. I want to see where this is the consequent encroachment is right here. We just hit this low right here. Let's see if we push any higher. Not taking that. No, no, no. This is too aggressive. Let's go down to the 30 seconds, see if there's anything. If we close right here in a second, that's a decent play. This is a decent play. Let's see what happens with price right here if it wants to come through this. Okay, it hit the break-even point. You would move your stop to break-even. Target these swing highs right here. Now the question is, why didn't I? All right, hey Tyler, you said you were looking at this as your breaker right here. Why didn't you look at that? Well, when you see an aggressive candle grab liquidity and an aggressive candle back up, that's a signature on price that tells me we want to go higher, right? And that's exactly what we're doing, and I wasn't willing to take that. All right, so we just grabbed that high there. Let's see if price has the momentum to continue higher towards these data highs, towards the all-time high right here. So I didn't take this, right? And why didn't I take the 30 second, which was right here? It's because by the time I saw it, we already closed, and I just refused to take split second entries. So I wanted to see it, and I saw it right after it was closing. So it ran without me, which is totally fine. It just means I have to be patient, and that's part of this game is patience. All right, so we got some price is looking fairly decent. It is looking fairly decent. I'm liking the flow. You see how it's just nice and smooth? So now we just need to find our structures on where price is going to go. All right, so that reacted off of this breaker sitting right here. We got an inverse. That was 1 minute. Low, high. See if it wants to find support here. Really, I'm just trying to figure out what direction we want to go. Really, I want lows. I really want to go low towards the data lows, midnight open. And then at this point, we now have our regular trading hour opening range gap, which is right here. See this gap from here to here? This is what I'm looking for. So what would be nice is if we grab all-time highs. Again, we count that as regular trading hours purging this all-time high, and then I would like us to run for these for the midnight open. That's my idea that I'm looking for to set up. I did, BF. I heard something that they were looking for some submarines. But I haven't heard anything about it being found. I'm honestly looking at this 1 minute breaker and being a little annoyed. I just wouldn't take it with how high we are, but look how it just played out. So low, high, lower, low. We broke the lows. We went higher, found support there, and we're probably going to hit this high. I just didn't take it. And I should have took it on this candle, the 938 candle. We come below, we come back up, we come back down, touch it, go long right here. We're just too close to all time. It's like I'm gonna be pissed if we have a trending day higher. Because I don't want to go long. I really don't. I really don't. That would have been a phenomenal trade, though. Oh my gosh. I mean, we're looking at 50 handles. All right. There is the all-time highs. Smacked again. $19,500. Yeah, it could be. We might run up to that level. But I mean, you can't go. You guys are seeing in live time somebody that has major FOMO right now. Major FOMO. I'm sorry, there's not much you can talk about right here. I mean, when you got 1, 2, 3, 4, 5, 6, 7 freaking green candles in a row. One thing I will say, though, this could be the formation of a market maker model. So here's our consolidation. We have our accumulation. We have some reaccumulation. We maybe go a little bit higher. We have our... Here, let me draw it out. So here's our consolidation. Just back and forth here. Then we have our accumulation, reaccumulation. We have our expansion higher. We may get another reaccumulation right here, finding support at the previous highs. We go up, we have an SMT here, and then we hit this level for a breaker, and we start running lower, targeting these lows right here. This is pretty much all that you could potentially see happen, but you also have FOMC this afternoon. Green, green, green. I'm going to keep this here for right now. I want to keep that here. I want to reference where that high is. Because we'll probably come back and tag it. This is really crazy. I wish I saw this 30-second or was just ready for it a little quicker. This was the 30-second play here. And I've done this before. I've done that play many times. You have this crazy strong candle lower. And I'm talking this through so next time it happens, I jump into it. Because we purge these lows right here. We sweep this low. Then we, in 2 candles, retrace all the way through it, close above it. That's an entry signal to target these highs or these highs and hold a runner for all-time highs. "30-second has a little more red in it. Looks like we might get our first red candle right here. That came into this fair value gap. Yeah, we got 1,500 right there. Yeah, big numbers tend to attract. All right, so here's our high, low, higher high. Fair value gap sitting right here. We wick down into it. See if we can break below this. Yeah, sell side liquidity next. Yeah, that's what we're hoping for. You just don't want to be manipulated out of the play. What I mean by that is if you get in too early, like maybe it comes down right here. So we have this high, low, higher high, and let's just say it comes right here. Do you want to get in right here when it comes up and touches, thinking we're automatically going to go all the way back down? I would say that would be a little aggressive. Price rarely moves just like that. There could be some manipulation that takes place. So we may get something like this. And then it starts consolidating. And then it starts moving. But you have to take a risk at some point, and if your model's there, you have to be able to be willing to put risk on the table. Expand on that a little bit, John. This is where we view it from the standpoint of where are early shorts getting stopped. So I think what I hear you saying is if we break this fair value gap right here and we go below it, thinking it's an inversion, we may get a deep retracement before it continues lower. I think that's what I'm understanding you're saying, John. And that is a valid point. That's a valid point. You really have to keep an eye on how is price moving and making sure you're not chasing price. I think that the overall answer to that is not to chase price. So when it comes back up to your level, you take your entry, because when you get that retracement and then you take it off of the retracement, you have a less probability you're going to get stopped out. Tiny accumulation, push higher, early shorts got stopped out, then the move starts to unfold. Yep. Makes sense. If anything, you could look at this range for a retracement back to equilibrium of this move right here. So look where equilibrium is at right now. Equilibrium is right next to the previous all-time highs. So that's attractive. I could see a retracement here. I could be willing to take a retracement play on a breaker and target this area here. That would be a legitimate play. Yeah, if these 1 minute breakers keep supporting price, we're in a buy program. As soon as we start breaking those, there's nothing here stopping price from going all the way down here except this all-time high level here, which was previously made on the news. So that could be a legitimate target. Unless we even bring this to all this lows. For those joining, what we're waiting for is price to show us we want to move lower. And right now we're seeing this fair value gap, or excuse me, this bullish order block finding support right here and continuing higher. If we close above this series of down closed candles, that's going to make for another bullish order block, and we need to see price break below this order block before we can do anything. You could buy at these lows and assume we're going higher, but that's just a risky play considering we've already had a giant move higher, over 100 handles. So from this low is 374, with 125 handles is what we've moved. So people can't help themselves trying to catch tops and bottoms, so we keep squeezing higher. I used to be that guy. Whew. You know what? I'm going to be 100% honest, John. I was that guy yesterday on one of my account. I was just messing around with it. I'm like, let's see if we can get a little bit of cash. And when you start just trading to trade and you're not disciplined, you find yourself just doing that because it's so easy. It's so, you think, oh, it can't go higher. Oh, it can't go higher. Oh, it can't go higher. Freaking. It goes higher and freaking higher. So I actually, I lost one of my individual accounts because I did that very thing. I don't like calling myself this. I was not being very smart in my choices, and I'm like, oh, well, I'll just mess around with one account and sit and, it's lower risk. I'm not copying all my accounts, so it shouldn't be a big deal. And end up just messing around to the point where after I did that, I'm thinking to myself, what did I just do? Did I turn off my brain? Did I black out in all of this? You are 100% right. You have to be vigilant to not try to catch the tops and bottoms. You can't do that. One of the reasons I love being on stream is that it requires me to stay disciplined and continue to act in that way. So I almost prefer to trade. I prefer to trade in front of people because it keeps me accountable. Because I know the rules. Everybody knows the rules. Everybody here knows your rules that you need to follow. But how many of us actually do it when there's no accountability? That's that right there. When that is mastered, that is when real success starts happening. All right, so it looks like we might start breaking through this. I want to go to a 2 minute, see what 2 minute looks like here. All right, so maybe I need to hang out on the 30-second. Look at this 30-second. That would have been a nice 30-second. I probably wouldn't have played it though, because we didn't grab any highs. Now see that low? This would be a play. In 14 seconds, I'd probably play that long to these swing highs. Let's see. We're going to close above it.
Order filled.
That's what I'm in along right there. That's what I'm targeting.
Order submitted.
Close below that would be an out right there. It's a tight stop loss, so I'm willing to take it. Okay, it's still live, still valid trade. If we start pushing lower, I'm going to get out. We have 22 seconds. See if it wants to push right here. Stop's going to be moved to break even here shortly. Once we
Order
grab
submitted.
these, there he goes. That's my, did we break that stop? Yes, we did. So stop needs to be moved to break even. Oh, it didn't stop me out. I'm going to close
Order
that
filled.
position because my stop loss was hit, but it didn't trigger. So I am out. Let's see what happened with that. I don't know why it didn't trigger that play, but that because of volatility, it only gave me about 3 handles. So out on that. Really, if it was going to move based on that volatility, I really wanted it to move right here, right around the 10:03 time. That's really what I wanted to see. And as soon as we broke above, here, let's just remove that. Right here, we broke above these swing highs, and then we came back down below where my entry was. And for whatever reason, it didn't tag me out, so I manually exited myself. And that is what you would want to do on a play like this, because it doesn't have to go higher. We have swept these lows and then pushed higher. So now we have relatively equal lows sitting right around here, and we have this one, this 30 seconds sitting right there. One minute doesn't look good, so I'm probably not going to play anything right here, especially because it's all in this consolidation. I mean, it looks nicer on the 30 second because we got more candles. And even if it closes right now, that's too low for me to take that. I might. I think I'll probably do a stream for FOMC. I'll probably do that. So if you guys are around and want to join for FOMC, I'll probably do some streaming. This is not pretty. I don't like the way this looks. I don't like the way this looks. If they haven't closed their position already. I mean, I don't know what insane person would try to hold this for a long move. That's just not me. Now, I will say, with that being said, I'm working on holding my positions longer. So no long here on the 30-second. You would have a tiny fair value gap here. We did grab liquidity on the downside, momentum play, equal highs. This would be not a bad, decent chase, but we're just so high that I wouldn't chase it. Let's assume we get in right here. Let's see what happens. I'm not doing. You see my mouse. I'm not doing anything. Let's see what happens. Reasoning for not taking it is just where we are. If this was lower, I would consider this a decent chase. Okay, so closed a nice large green bullish candle. I mean, that's very bullish. Where my cursor is, that is our fictitious entry to see what happens. Yeah, let's do it would have been right here. I actually like this 30-second right here. To the downside. Just an unwillingness to move higher, even with these equal highs. I mean, we got 1, 2, 3, 4, 5. I gotta imagine. I mean, this cannot stay here long term. This has to be disrupted here. Absolutely, breaker is forming. Okay, so there's the high. That play, momentum play, did work out. I did not take that on any account. Gave my reasons why. Are you looking at this being your breaker, 10, 12? No, let's see. So high, low. Low, high, lower, low. No. Ooh, this would be our breaker right here. Ten, 10. Yeah. Look at that explosion. See what I mean? This is, boy. See how the rules are just, they save you, but man. I'm crying on the inside right now. Literally. Tears are happening on the inside right now. Look at it. We put our entry, what? It was about here. 946, and we're at 9 or we're at 496, and now we're at 520, so that'd have been about 25 handle move. This is a setup. I like this. If we get a nice breaker entry, I'll take a bearish breaker off of this. I like these equal lows. We have a reaccumulation. Let's see if we can get we can get a SMT right here, or SMR, smart money reversal right there. Let's see, do we have, what's price doing on these? Okay, both have hit their respective highs. This is just gonna drop. This is how I see it. I want to get in short, but I just can't because I've seen it go against me so many times. Because I don't have my setup here. I'm just going this. Basically, I'm speculating. Here's the 15-second. Here's our high, low, higher, high. Here's our breaker. When you got a lot of volatility in a very short period of time, lower time frames are very helpful because it shows the structure that you normally wouldn't see on the 30-second or the 1 minute. I mean, you see nothing on the 1 minute, but you go down to the 15-second and it looks really nice. I really don't take trades off of the 15-second, but the way this is looking, I might consider. This also would be this fair value gap right here would be an inversion short on the 30-second. Yeah, it's better on the 30-second. This is what I will be wanting to see happen. Set my stop at 10. I'm not in anything. All right, so we just wicked below that. Not a bad idea, John. Not a bad idea. This would be model 22. The model 2022, if it wicks right up into here. It's 1021. We're not in a macro. We exploded higher around 1015. The longer this plays out, the less I like it. So that makes this less attractive. Redelivering off of this fair value gap right here, we wick down into it. And it wicked into a 5-minute fair value gap as well. Even though we haven't taken anything, you guys can see the signatures in price that we would have had an opportunity. So you look at this right here, all this consolidation. This candle at 1010 wicks below the first down closed candle. And then the next candle has a bullish candle, a very aggressive bullish candle. Right? This is a high, I'm not going to give it a rating, but it's a higher probability idea that we are going to go for these highs because we manipulated below these lows. It's a signature in price that is it's reliable. You just need to make sure you're in the right environment. We didn't take this one simply because we're at all-time highs. And I just can't. I can't. That's all I can say. Like John says, keeping my hand off the mouse for now. Here's the Model 22. Let's see if it holds here. If it doesn't, this is the reason why. I mean, shoot. You could go to all-time highs again. This is why we're not taking short, and you could go long because the pattern has been going long. Look at that. There it goes again. So this is indicative of all-time highs. It's probably going to push some more, making some nice structure for later. So on the 32nd, this would have been the 32nd inversion that you could have played. The close was there at 10:23:30, and then the next candle 5:20 to 5:28. So it gave you 8 handles in 30 seconds. And I would have sold it. Because, I mean, who knows what's going to happen with price here. You don't know where price is going to go. Don't know how high it's going to go. We got some equal lows right here. Number one question to ask yourselves throughout the day: which arrays are being respected and disrespected? Well, you can tell every bullish breaker or bullish order block and higher time frame fair value gaps are being respected. Hold on one second. I got some cleaners that are showing up. I just need to open the door for them. All right. Run, baby, run. It's running higher. It won't stop until I turn off my charts. And then it's just going to collapse. I turn off my charts, I walk away, and then it just, to the floor it goes. Initial consolidation. Reaccumulation. We're going to get the setup. It will happen. Well, technically, I'm 1 for 1 on the day. 1 for 1. Just, I got out with only like a 4-handle move. All right, here, what do we got here? We got a decent down close candle. And we do have a 30-second breaker. High, low, higher, high. Let's see, we need to close below this for a value gap. Right here. Look at that respect, man. Look at that respect. Long right here to that high. See you, Beth. Take care. The other thing I need to note is that all this manipulation happened right at 10:30. You'll get some manipulation and then it acts like it's going to go somewhere and then it just doesn't. All right, so here's probably the close below this. There would be your touch to go short. I'm going to see where this candle closes. Because we have been in a bullish trend. I just don't want it to explode higher above me, above that level, like it is right there. All right, now see how that candle closed really high? It closed in line with the top of this breaker. Makes this a very poor type of setup I would not want to take. That's why I waited right there. It's more likely, has a higher probability of hitting this high than it does to continue going short. All right, do you see how we waited on that? Even though we had a breaker, we had the pattern show up. Why didn't we take it? Because, one, we're in a bullish environment. I need to wait to see for candle closures to see how they're going to react. This one, thankfully, it gave me the signal right away and it told me it didn't want to go. Now we have a different high, low, higher high. So we have a new breaker right here and we can watch price and see what it wants to do on that one. This move from this high has gone one standard deviation from this high.
Order filled. Order submitted. Order submitted. Order filled.
All right, that was 20 handles, 20 points, right? 20 ticks, I should say. So 5 handles right there. For a win, I was just targeting these lows right here on my micro account, copied on 6 different accounts. So that's what I was targeting right there. Not sure if we were going to continue higher or not. Could have held it for longer, obviously, at this point. We got these equal lows that are right here. You could get on a re-entry in this fair value gap right here for a short. Targeting these equal lows. Targeting that level there specifically. So that was a breaker play. I got in on this candle right here, the 1038 candle, with the wick up into the breaker. It came back down too quick, so I got a really poor entry. I would have got a full 10 handles if I got the entry that I wanted. All right, so see how I touched that level there? I'm not taking this, but I'm watching to see how it reacts here. Anything in this down close candle is technically allowable. We want to see where it closes. Ideally, we want it to close below the mean threshold, which is right where my cursor's at. So it actually touched it. We want to see it close below there and to stay below there as far as it closed. If it closes above that, that would make, in my mind, this trade invalid. Okay, so it closed above it. That makes that trade invalid. I wanted to see it respect that a little bit more. It is aggressive. If it closes below this 1 minute or this 30-second, what does it look like on the 1 minute? We got a 1 minute fair value gap right here. Redelivering off of that. Targeting these. I do like that. Probably gonna go too fast for this. 30-second right here.
Order filled. Order submitted. Order filled.
Okay, took that on that stab lower right there on the inversion of this 30-second. So played that inversion of the 30-second. Why did I take that? Well, we're in a market maker sell model. I looked at this as a market maker sell model. We ended up respecting this, so I was looking for my second entry for a confirmation play. We inverse this 30-second, get in, and we target these lows. You could even target these equal lows. And now we're in this fair value gap right here. We should see some type of retracement. Ultimate target is going to be these lows right here. Okay, so we're still in here. This right here would have been the come back up to tag that level. Even go into this level here. So that would be, we want to see it respected there. Now, just like we didn't up here, we don't take it on this just because it could reach for a higher level. It could reach all the way up to here if it wanted. I think that's a little high. I think this seems reasonable, that it could reach up to this down close candle right here. Cover this fair value gap right here. Let's see that it respects this fair value gap, because we didn't even grab liquidity down here. We didn't grab those. I want to see if it wants to respect this fair value gap, this CPI right here. If it closes above this, okay, so it looks like it's respecting that. 7 seconds left. Let's see what happens. We hit this level here. Okay, it did respect that. We could just see a nice large candle push right here. $11 seconds left. Let's see if it respects it still. If it closes above it, which it is, that's something we want to stay away from. We could come back up to this level here. That is a breaker right there. Obviously not taking anything. We want to see how it reacts at these levels. We're watching for reactions. We're also at the 10:45 price time, not price, but time frame. So we're in the 11 a.m. macro. So price tends to move around these times, so we're getting some decent price action. We just want to make sure we're right on the right side of the move. Okay, we're also redelivering from a 5-minute fair value gap. So meaning we could just push right up here and go higher. Okay, so obviously it's not respecting that. We did inverse this. That would have been a nice inverse towards this high, but obviously we weren't looking for that. So now let's see if this breaker wants to hold right here, this green candle. That's what we want to see, if that holds. If that wants to hold and if it wants to push higher. We still have this breaker, the original breaker we went off of, the bearish breaker. This is a bullish breaker. So right now, price is 50-50, so we stay out. We stay out. Or we take the lower entry. So we take the entry that is not as ideal. See what the 1 minute looks like. 1 minute still also looks decent. Here's our low, high, lower, low. No reason for us to continue higher, in my opinion. We've already too high. I'm looking for short plays, so I'm not taking anything long. Even though I felt like I had FOMO for the last hour, watching price just explode higher. I'm still not going to take that. So the 2 minute right here looks decent. If the 2 minute closes below this fair value gap right here, that would be a short to go. That would be a short, but we have 55 seconds left and it looks pretty aggressive right now. So 1 minute, 30 second. Five minute, 2 minute, that's decent. I'm not taking this. I'm going to be done for the day. I got 15 handles for the day. But this is a valid entry right here. Let's see what happens here. So your entry would be right there. Stop loss would be above that candle. You'd be targeting this low right here. Redelivering from another 5 minute fair value gap up there. So we boom, ping ponged off of that. Now I think we run for this liquidity right here and these lower lows right here. So since we are taking a 2 minute entry, we want to watch the 2 minute time frame. Now you can take your profit here at 13 handles, or you can move your stop to break even, sell a position and hold for lower. So stop is going to be, we're waiting for this level to hit right here. Still in it. Rules still apply. This is an invalid trade until it either goes below this level here where you move your stop to break even or sell your position. Until then, a close above that inversion is a close. So we're about to hit this low here. Still holding this. We want it to hit this low here. And if it breaks below this low, it wouldn't surprise me if we just have a nice big push right there. All right, stops to break even. You're taking some size off. All right, you leave one last runner down to here. So you should have a 13 handle win already. Holding a runner down to here. This would be a total of a 30 handle play. If it hits. Now, why am I talking this out? One, for you guys if you're in the trade. Second reason is going to be, as I read this out loud to myself and to you guys, I'm building my confidence in these potential plays, right? So now that the next time I see it, I might be more willing to take it. I wasn't today because I was already up on the day, and I don't want to lose profits that I've already made. This was a nice trade. It looks like this might actually break us out at break even. I love when I'm able to move my stop to break even because it's a free trade for us. I love free trades. So 1 minute looks like we're hitting this 1 minute fair value gap. That's the resistance we're seeing right now. Okay, let's see what happens first. Do we hit profit? What do you guys think? Are we going to hit our profit target first, or do you think we'll hit stop? We'll get stopped out. What do you guys think? Are we going to hit our target, or are we going to get stopped out? What are your guys' thoughts? We are right now finding resistance in this 1 minute fair value gap at the consequent encroachment. You can see the consequent encroachment is supporting price right now. We have these relatively equal lows that are my draw on liquidity. We obviously have bearish price action that's showing right now. 5 minute fair value gap, John, right here. And these equal lows. I think that's a great target. Also, we look at from this low to this high. Consequent encroachment. Equilibrium is right here. Is this red line. So I think that's a very good target. Or the draw on liquidity. We don't try necessarily to hold to there. I probably would just hold to here when we hit this 5 minute. But knowing that price has ran this much, we should come back to 50%. All right, we're about to hit 11 a.m. Still in the macro time, which is nice. So that gives confidence on the trade idea. And really the structure, guys. This structure just says market maker sell model. The question that we really need to answer is, do we have any opportunity to go higher? Because if so, this probably won't be broken. What I'll see is market maker buy and sell models will run, form, but won't complete it if we're in a if this is just a bearish retracement. That would be the only reason why we're broke if we stop out at break even. Is this was intended to be a retracement to grab liquidity with the intention to still push higher maybe later in the afternoon or FOMC, or to leave this for this afternoon as well. That would be why we break even. Here's 1044 breaker that John's talking about is right here. This is the breaker that he's referring to. Let's put that here. Let's see what happens. Obviously, you'd be looking. We're already in a play, so we just hope that it finds resistance right here and doesn't stop us out. And there's our stop out. We just got stopped right there. So we would have gotten 13 handles off of that first target. And then if you did take anything else off, you could have got up to, what was this? 22 handles if you would have sold there. Decent play. We're still in that breaker. It's just a large breaker right now. A large bearish breaker that has a lot of room for some manipulation. All right, guys, I'm going to call that a day. I'll probably be beyond. Did I say be beyond? I'll probably be on this afternoon just to watch FOMC. So I'll drop something in on X. So if you don't follow me on X, it's Jesus Trade 7. Follow me on there, and I'll drop a notification if I'm going on then. So thanks for joining me today, guys. Got 2 wins, 3 wins technically. One was really a break even, and then we got 3, so 3 for 3 on the day. We were patient. We were able to remain patient while we're seeing price run higher. Once we broke, I'm just doing this trade recap so you guys can see what the trades were. Okay, our first entry was on the 32nd. The 30-second breaker, which was right here, high, low, higher, high. We ran below these equal lows right here, and then at 10:37 and 30 seconds, we wicked back up into this level here, and that's when I went short. Went short here and sold right at this low here, and you could have had it run a little bit farther. And then on this retracement back into this reclaimed bullish order block, we found some resistance, and then it left this 30-second fair value gap right here. So once it inversed right there, based on this high momentum, I got in around here and targeted these lows right here. So those were the 2 trades that I took for the day. And maybe we have something more this afternoon. Thanks for being here, guys. Thanks for watching. We'll see you maybe this afternoon. We'll talk to you soon. Bye-bye.